Agarwal Bali, who's the co-founder of Meteor Ventures. Ms. Bali, can you have your session?
Hope you guys are all pepped up and not sleepy. A lot of Gyan session. So nevertheless, thank you so much for giving me this opportunity, UIncept team and the passionate and young founders over here. Welcome you all. So I'm Sonal Agarwal Bali. I'm the co-founder of Meteor Venture. We are also an accelerator for the startups. So we have 4 programs that we do in Meteor Ventures. One is the fundraising. Obviously, we are kind of helping the founders to raise their tranches of funds. The second is we also help them into their growth hacks. So growth hacks will include concepts like B2B partnerships, synergizing within the ecosystem that we have of the portfolio companies, digital marketing, growth hacking services, so on and so forth. Then we have financial coach. So I, being a chartered accountant myself, so it makes more sense for us to give this kind of a service. So in financial coach, we become, we have a team which serves the startups as virtual CFOs. So virtual CFO, as the name suggests, that we are working with the company but remotely or probably on a part-time basis. So we consult the startups for the CFO services, wherein you can't pay that much, but at least you get the competency of a CFO caliber, right? And we also take care of all the legal aspects, the DDs, the SHAs, the term sheets, and all those things that comes along from the other aspects. Then we also do product to idea. So in case anyone has got an idea, so how to convert that particular idea into a business idea, how to make that journey possible, how to make that idea work. If you want to create a product, which is a technology product, we can help you in that as well, right? So that is what I'm currently doing. By profession, I'm a chartered accountant with 20 years of experience now, having worked with MNCs and startups at the same time. So MNCs like Pepsi and startup like I was heading finance for Oyo Rooms, which is like one of the first unicorns, amongst the first top 10 unicorns of India. So very proud of that. And I've also worked as the head of startup initiatives for a fairly large group in India, which is an Indian group. So, passion for the startups. So I started my startup journey apart from Oyo Rooms as a mentor. So I started mentoring a lot of startups, and it was useful. So that's how I kind of kept on doing it. And today I'm consulting a lot of startups. I sit on the board of IIT Kanpur as a mentor. I'm also associated with AIT, AIC BIMTech and all those Atal incubation centers. And I can be reachable for any kind of mentoring if any one of you requires, right? So starting from where Ankur left. So I think valuation is something that is very crucial for any startup. So if you're going for a fundraising journey, I think valuation is the word that everyone should know, and that's how when you say fundraise, valuation is a synonym of a fundraise, right? So what is valuation? Valuation is the price that you are paying and the value that you get, right? So from the investor's point of view, and this is a Warren Buffett, by the way, word or a statement, that price is what you're paying and value is what you're getting. So when you think from the investor's point of view, he pays a price for what he's buying. He's buying the shares of your company, right? And the value is what he's getting in return. He's just getting a share certificate. So what is the value of that share certificate? It might be 10 rupees, it might be 100 rupees, it can be 1000 rupees a share. So that's the value that he's getting. And how do you arrive at that value? So as a startup founder, I think it's very crucial for all of you to understand how you arrive at a valuation. And especially when you start off, when you're a startup, you don't know how to value your company, right? There might be no revenues. So how do you value a company which has no revenues? You might be just 2 co-founders, no employee. How do you value, right? There is no revenue, hence obviously there is no EBITDA, there is no profit that you're earning. So how do you then value? It's an idea, there are two people, and then you have a market opportunity, right? So those are the only things when you start off with an idea. So what do? You try to create value of that idea, right? And I'm just minding you people, there is no number on the table. 2 co-founders, 1 idea, and maybe a private limited company. Yeah, so that's the value. So now you have to create value to actually go fundraise. And before fundraising, there's a journey of fundraising, right? So the first milestone of a fundraising is bootstrapping, right? So how do you bootstrap? You use your own savings. You ask for money here and there, and you create a company. That's like you are bootstrapping. The second milestone is you raise a family and friends round, right? So you have an idea, then you go to your parents, you go to your friends, you go to your mentors who believe in you, and then you tell them that this is the idea, and hey, can you give me that money? I require say 1,000 rupees. I have 500 rupees, I want 500 rupees. So can you give me? Can you help me? So that's the round of friends and family. It can be bigger also. It can be 1 CR, 2 CR also. But I'm just giving an example. Then comes angel round or a seed round, right? So with that friends and family or your own bootstrapped money, you have created something. Now you want to create or seed that. When you seed something, you see something blooming out, right? So unless you seed, you will not see that flower coming in. So for that seed round, you have incubators, you have UIncept, you have Meteor Ventures, you have so many incubators and accelerators which are helping you to seed that particular idea, right? And there are angels, and as the name suggests, angels is like, Pariya and all those angels. So those are the angels, and I really like this term angel because this is the person who is believing in your idea. So he's really an angel and he's giving that money out of a connection, maybe emotional connection, right? Maybe a connection that he connected with your idea. So I invested in a couple of companies where I had resonated with the idea because it was my own problem, right? So I became an angel to them. And they said, because you know this idea, so you know that this is a problem and we are going to be resolving this problem. So that's how an angel comes into the picture. So you do an angel round. Then once this angel round is done and you have done the initial early stage bit, then you go for a series. Now series is series A, B, C, D, F tak jayega. So that series means that now the institutional investors will come into play. The moment the institutional investors come into play, it starts to be called as series. Yeah. So then you go for institutional investor. So that's how your journey of fundraising begins. And the first word is valuation, right? So what is the value of a company when you have nothing on the paper? So there are majorly 3 ways of valuing a company. So one is an asset method. The second is a DCF method, and the third is a relative method, relative comparison, right? So the asset method that is always used for very big companies, which is like a holding company, an investment company, which have got assets under it. And hence you can value them on an asset basis, right? The second is the DCF method, which is called as a discounted cash flow. So now this discounted cash flow method is all mathematical calculation. So if you have anything which is certain, if you have anything which you can measure, you can write it down in terms of numbers, then you can use a DCF. And DCF is the most popular method, by the way, in India and abroad also. So DCF mein kya hota hai that you have some past history of your company, and then you can have foreseeable projections, right? So when you have foreseeable projections, then you can put that into your financial plan, as we were discussing the B plan, and you put that, and then you come at a valuation. There's a formula which you use for the enterprise value at the end of 5 years, 10 years and all that, and then you arrive at a valuation. But In startups, because there is no history, probably no history, forget about the unicorns, etc., which start following the DCF method. But when you are starting off, then what do you use? What kind of methodology do you use to convince your investors कि भाई my value is 5 CR or 10 CR or 15 CR? Early stage में यही रहता है, इससे ऊपर नहीं जाता है valuation. तो then you use the relative method, relative valuation method, which is called as RV method, right? अब relative valuation method में क्या होता है that you can use lot of criteria. You can use employees as your criteria. You can use price per subscriber. If you're an app company, you can use that as your criteria. You can use a peer-to-peer method, wherein because you don't have anything, but you have a peer in the same domain, so you can use their comparatives to value your own company. You can use a scorecard method, wherein you are giving scores, relative scores to yourself and to other comparative, and then you see where you stand, and then you come at a valuation. You can use Burker's method, which is again you put down all your management team, your market sizing, all those factors that comes into the play, and then you can value your company, right? So those are very technical aspects of it, but I'm sure you guys know about it, right? You must have valued your company, so you know how you're valuing your company. On the basis of the product that you have developed, probably you have spent something creating that product, or if you are trying to create a product, then who are you benchmarking with, right? If I'm making a marketplace, there are so many marketplaces, so I can find out my closest competitor and then value myself according to the same. So for example, Unacademy hai, so I am starting off, so then I will have to discount my valuation with Unacademy's then valuation when they had raised say 5 million. I am also going to raise 5 million. तो उन्होंने अपने आप को क्या value करा था, but उन्होंने 5 साल पहले किया था, मैं आज कर रहे हैं, तो there would have been some change, so you can take that reasonable shift, and then you can value yourself, right? So this is all about valuation, but startups में valuation is all gut. When you sit across with your investor, you go with a mindset that you will put your valuation as X, right? But it all then comes to negotiation. How well you are able to explain how you're valuing your company, right? So my first tip to you guys is never say valuation first to your investors. Let them come up, you explain the entire product to them. If they feel excited, and if everything goes on well with the team, with the market size and the opportunity that they see, and with your product, they might feel interested in investing in you, and that's when you should talk about valuation. And let them come first in speaking about the valuation, and try and gauge what their mandates are in terms of valuation. So there are certain VCs and there are certain angels who do not invest in a say 15 CR valuation and above. So there is no use that you go with a 20 CR valuation with them. They will never invest. So try to understand practically what this VC is doing with the others, or what this angel is doing with the others, and then try and gauge how you want to kind of articulate yourself, right? So first is, don't say the valuation yourself, try and gauge what the investor wants. Tip number 2, please understand the pre and post money valuation concepts. I think Ankur has explained it well. So there is always a trick. The investors might confuse you with pre and post, and the shareholding percentage actually drastically changes in pre and post. So please, when you're trying to negotiate on the term sheet and valuation, always keep one term static: pre-money valuation, right? For example, I'll give you, like you are valuing your company, you have already put in 1 million, right? And you want 500K. तो post money valuation कितना हो जाएगा? 1.5 million, right? अब अगर शेयर होल्डिंग पैटर्न देखो, अगर आप 2 co-founders हो, तो 1 million में अगर आपका 50-50% है, तो 50-50 है, और जब 500K आ जाएगा तो 33 हो जाएगा, ठीक है? लेकिन अगर आपने उसको 50% बोल दिया, तो वो तो 50% ले लेगा और वो कहेगा ये जो 50 बचा है ना वो आप दोनों ले लो, तो क्या हो जाएगा 25, 25, 50. ये ट्रिक होता है. सो प्लीज कीप इन माइंड when you're talking about valuation and fundraising, what is the equity that you're diluting, and are you diluting on pre-money or you're diluting on post-money, right? Your shareholding pattern will always come as post-money, so keep that in mind कि आप उसको 33% दे रहे हो ना कि 50% दे रहे हो, right? So keep that in mind. The third thing is the instruments. We've already spoken about it. There are three majorly kind of instruments. One is equity, upfront equity. You part away with your shareholder or the VC. The second is CCPS, and the third is convertible note or the T-safe notes or the I-safe notes of the world, which are these concepts which has come in. So I think one is if you are parting away with the equity, CCPS is the best. You have your valuation in place. If the valuation has been locked in, the investor is also fine with the valuation, go for a CCPS. If you think that you are not sure about the valuation and there is no consensus which is coming on the valuation, go for a convertible note. So convertible note mein it's nothing, you get the money then and there, but you convert that into an equity after a specific horizon, say 1 year, 2 year, or the subsequent round of institutional funding, wherein more robust method of valuation will come, and you will also be able to justify and create that traction and reach that milestone, and then you'll have a definite valuation on which you will convert this note to equity or CCPS. And because they are an early believer, they are giving you the money without even any instrument or a sitting on the cap table, they would want to have some discounting, which is called as a coupon rate or a discount rate, right? So it generally ranges from 10% to 30%. It all depends upon your negotiation skills. How much are you able to negotiate? But 10% minimum होता है, उससे नीचे कोई नहीं मानता, और 30% maximum होता है, उससे ऊपर कभी मत देना. So those are the 2-3 tricks for your valuation aspects. Now, how to increase the valuation? So I have just written down some points so that I don't miss. Yeah. So, as I said that when you're sitting on a ground zero, when you have only 2-3 things to boast about, then how do you want to increase your valuation? So there are certain aspects which you would want to kind of put forth when you're negotiating with your investor. So tip number 1 is your own presentation, how you are storytelling. So I think you all have gone through this particular storytelling aspect from one of the earlier sessions. It is very important. When the investor is sitting, and especially during COVID times when everything is happening virtually, try in a virtual world, try to bring on the video. And you can also request your VC or an angel to switch on their videos so that you can see them, how they are reacting, what is interesting, how they are, what is their gesture, all those things matters a lot. Create eye contact and present your story in a way that it excites them, it motivates them, it resonates with them, So just try and kind of understand what is exciting them and try to mold it accordingly. So it is a very extempore, but go prepared. When you all must be having a pitch, so do practice of your pitch. Just don't go and बस बोलना है कुछ ऐसे नहीं. Practice your pitch. There are specific points that you would want to highlight. So your storytelling has to be really, really robust and interesting, right? So if you have started something which comes from your own problem statement, I think that's the story that you should bring about. What you're doing, maybe other people are also doing, right? But why you are able to do it better than the others, that's most important. What is the value proposition and how well you understand that problem statement that you're trying to solve, right? Okay, tip number 2 is don't wait for the investment to come, right? Your customer is your first investor. That I always tell my startups that please don't wait कि जब पैसा आएगा तो ही मैं कुछ करना शुरू करूँगा, तब तक मैं बैठा रहूँगा. Please don't do that. Start selling, right? So unless you start selling, you will not get to know the analytics of your product. Once you have customers, there'll be data, there'll be feedbacks, there'll be so many iterations that will happen. So if you have started selling your product and you have believers in your, of your product, you can make a beautiful story out of it and try to attract more money and try to attract an early money rather than going and saying कि मेरा product तो बहुत अच्छा है लेकिन मेरे पास customer नहीं है इस समय. It is like trying to sell something for which you also don't know. So it's not that you have to go and sell to the external customers. Try and sell it to your family. Take their feedback and try to make how well you can have more customers in the ecosystem, so that you have some sales number, you have a traction, and then you have feedback, and then you have analytics. All these things matters a lot, right? The third tip is create a prototype, not just the idea. So if you already have an idea, so try to create something. So for example, if you are dealing in EV, so product is what? An electric vehicle, right? So you can't just go and tell an investor कि मैंने ऐसा सोचा है कि ऐसी स्कूटी बनेगी, उसमें ये चलेगा, वो चलेगा, उसको नहीं समझ में आएगा. You have to create a prototype, right? So when you have a prototype and you try and then position it with respect to your competitors, कि why it is better, it's a one push button. It uses, because you've already tested it, it lasts for maybe 10 hours rather than 2 hours or 3 hours against your competitor. There is no pollution, I don't know what, blah, 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 right? If you're a tech company, try to create a prototype of your app or something. It doesn't cost too much in today's world, right? Try to raise a family and friends, go for a prototype, and then go to the investor. Don't go with an idea, because those were the days when you used to get money on ideas. Now, no more, right? So that's very important. Another tip is very important, which I feel is very important, that you should have an A+ team. So, as I said, that generally in startups you don't have lot of things to boast about. So an A+ team can be an advisor, a mentor, anybody who has a proven track record. Go to that person, onboard him as a mentor, advisor. If you can afford to bring a co-founder or on ESOP, without paying too much of salary. So try to do those gimmicks so that you have nice and experienced people who have a proven track record, or you yourself, if you are proven and you're an IIT or something, great. But if not, then please have somebody by your side who can complement those skills for you guys, right? So that's very important. Then, as I said, that position yourself very well with respect to your competitors. So if at all you are making a very unique thing which does not exist on earth, then it's fine. Otherwise, please study your competitor more than your own product, because those are the you might think that you're doing something which is very unique, but when you go to the investors, they have already evaluated a lot of startups and they'll say कि यार ये भी तो ये कर रहा है, तुम क्या खास कर रहे हो, है ना? So how do you then position yourself? So क्या होता है पूरी मीटिंग में then you are only talking about the competition. How are you better than the competition? So if you've not studied well for the competitor, you don't know what they are doing, you don't know their inside stories, you don't know their numbers, you don't know how you are better off than them, you will not be able to attract the investor. And the first meeting में ही हो जाएगा कि you तो यार copycat, or we've already evaluated this space is not working, right? So go very well prepared with your competition also. So obviously you have to have all the answers to your competitors. मतलब you can't just say कि अच्छा ऐसा भी कोई competition है मुझे नहीं पता. If you don't know, try to be a little diplomatic so that it doesn't seem that you've not done your competition metrics very well, right? So these are the things while you're going to the competitor, while you're going to the investors, how you're pitching yourself. Then obviously comes the discussions, the term sheets, and the agreements. We've all spoken very widely about the agreements, so I'm not going to be touching upon the agreement part. One of the thing that I think I requested Ankur to mention was the expulsion clause. So what is expulsion clause? So if there are 2-3 co-founders, or probably there is an angel who's a little troublesome maker, so there is always an expulsion clause in your SHA. You can actually put that by the decision of the board, you can purchase the shares of that particular troublesome or a conflicting, or a person has done some fraud or misappropriation or embezzlement. How you can exit that person from the company. So that's an expulsion clause which everyone should have. And even when you're doing the co-founders agreement, have that expulsion clause against each other. So how you can kind of do. And it's very important if you are an IP related company. So IP, who owns the IP is very important, and what happens if there is a conflict between the co-founders. Then how does the IP gets, because probably IP may, if there are 2 co-founders and somebody's name is also there, then you will really have a trouble later on. So how you can resolve all those things even before getting into that dispute. So that's very important, and I think I would want to keep it very interactive. So in case you guys have any question, we'll be more than happy to answer those questions. Yeah. So product building, it's very important, because how will you otherwise put your value proposition? Mm-hmm. The investors के लिए तो it's very important. It's like 200% important to know your investor, to know your competition, and to know what they are doing and what you are doing differently from them. But I think even if you're designing a product, so generally there are not too many things that you can do differently. So don't try and ऐसा ना हो कि ना पढ़ने के चक्कर में you create something which they have already done it. So probably understanding the competition is also sometimes good.
I think this is also first read your own
Yeah. Yeah, you can do that also. See, with your own self, it all depends upon your own approach. But wherever there's a third party involved, then you have to be extra cautious. Then you can't be sitting blank that your competition is doing this and you don't even know about it. So that's the time when you should be very, very well versed with all these things. Yeah, when it's between the 2 people, it's your own approach. Whatever approach you want to. Some people would want to kind of study the competition first and then build the product, and some would want to kind of innovate the product and then study the competition. That's an individual approach, whatsoever suits oneself. Yeah.
I have a question. Right now I'm raising fund for my startup.
Okay.
So I'm planning to graduate 7% at the amount that I'm asking.
Mm-hmm.
So when the whole process will be, so it will be after fundraising 7% that is not pre-money.
So you need to decide that whether you're raising it 7% pre-money or post-money. So I'm sure you must be raising pre-money only, Yeah. So there'll be a pre-money, and the investor should be very cautious that today he is investing a particular amount for 7%, but post-money cap table will further bring down his shares, because then his share will also be sitting. So as we discussed, denominator, you're taking 10,000 as a denominator or 12,000 as a denominator. I think that's important.
In terms of as a sir discussed, everything was from the side of the investor.
Mm-hmm.
But we did discuss from the side of the founder.
So yes, of course. So you should always have a very good legal advisor on your side. Sometimes you don't understand, as a founder, you don't understand how dangerous the drag-alongs and the tag-alongs of the world can be, right? So unless you understand, when I read my first term sheet, I didn't know these words, frankly speaking. So I had to learn, what does this mean? Drag along is a majority stakeholder protection right, and a tag along is a minority stakeholder protection right? So you need to understand these things. जो majority drag along में क्या होता है, तो majority stakeholder होता है, he says कि I want to sell the shares or I want to sell the company to X acquirer which I have found, right? First the ROFR will come into place. So if the company says कि नहीं मैं नहीं करना चाहते, तो वो क्योंकि वो majority stakeholder है, he can drag along the other shareholders along without, and this minority shareholders will not be able to say anything because they've already signed that SHA, right? And also as Ankur mentioned, that once you sign the SHA, you don't go and read that, but you have to really read that SHA time and again because there are affirmatives that you have to, get signed off. So what are those affirmatives that you need to get signed off from your, because today in today's world, no VC is going to take board seat. They are not interested because board seat comes with a lot of liability. Fraud आप करोगे पकड़े वो जाएंगे, है ना? So they don't want to, but they want affirmatives and reserved matters. They want that everything, every damn little thing you do, they should be made aware of that, and you should take, and it's in your good also that you should take the affirmative. If you don't go and read the SHA time and again, you don't see those reserved matters time and again, then you might pass a board resolution in which an affirmative is required. Then you are risking and you are conflicting the SHA, which is going to, because it's a legal document, you will be dragged to court, introduce a dispute resolution, right? So it's very important. Mug those things up. Maybe you don't read it again and again, but please understand your SHA very well.
Follow-up question on that. Like, suppose you took 1 CR in my company and we signed the amended term. Next round, someone is putting 10 CR. तो जिसने 1 CR put किया था वो तो उसका डायलूट, मतलब उसकी तो शक्ति चली गई, जिसने जो टर्म शीट बनाया था, तो नया टर्म शीट आएगा जिसने ज़्यादा पैसा डाला, तो फिर उसका से होगा.
So generally what happens when you are as an angel investor signing a term sheet, SHA, term sheet is a non-binding agreement, ठीक है? तो term sheet भूल जाओ, एक बार SHA sign हो गया, term sheet has no sanctity at all. Term sheet is just to give you broad terms in order to save time, what Ankur said, कि पहले से ही पता है कि these are the terms that we work on, right? If it is agreeable, let's get to the work, otherwise just slash it off, right? So the question is that whether the subsequent term sheets come into effect. Yes. So generally the clauses are there that subsequent term sheets will override the previous term sheets, SHAs. But there are certain SHAs which says कि हम आगे का term कुछ भी होगा, we will be ruled by this SHA. So then there will be two set of investors who have signed this SHA and the other one which comes later on, and those are the points wherein the coming investor would try to bring that shareholder or a investor into exit, क्योंकि वो trouble create कर सकता है future में, ठीक है ना? तो जो भी exits होते हैं mostly, क्योंकि angel round जब होता है ना, तो the founders are so desperate that they sign up everything, which creates troubles in the VC round, and VCs are very professional. They won't sign on anything wherein there is any troublesome thing. So they will say कि okay, let's buy this troublesome person out, and that's where this angel will get an exit. Yeah, but there has been situation wherein the angel will say कि नहीं मुझे तो exit लेना ही नहीं है. So then what do you do? So yeah.
Regarding these startups, so you have touched upon point of services. So suppose when it's all about selling. Either you sell with your product, you have traction in the market, you have enough ticket size, you have enough revenues coming in, you have enough other skills that's being tapped. Also, another component is that can be who are you advisors of people that associate with the company. Suppose I have in my own business, or my friends and family, I know the owner of
Yeah.
India Police, right? So if I'm able to get, say somebody who's a co-founder at India Police, and he's in one of my relations, how am I supposed to get, as a startup, into one of my classes, and for this process, do I need to kind of Or how does it work like that? Why should they?
So yeah, so basically, see, mentors and advisors, there are two types. One are just they come pro bono. They just sit on the board of your advisor. So you make a pool of advisors or a board of advisors, wherein you bring these synergetic and very top people who can advise you on certain things. And they come pro bono because these are guys, they will not be able to justify the equity if they take. ये तो तब का है, मतलब you just use their name, right? These are so big people. You use their name and give a call. They are just a call away. So they will never come to you. You will have to go and ask. So those are the advisors when you talk about top-notch people, right? They come and sit on your board of advisors. The second one are the mentors who are actually engaging with you on a very frequent basis, and they are adding a lot of value in your business, right? These are the advisors, mentors who have got complementary skills also. Like for example, you are a techie, you know everything in tech, but you don't know anything finance. So you want a complementary skill set, finance professional who can come and mentor you on the financial, to help you make a business model, to help you set up the processes, in your startup. Or probably you want a legal person because you're raising a round and you don't know anything in legal. So you want a mentor to come and mentor you into legal, maybe for a short time, maybe for a long time, it depends. So that kind of an advisor or a mentor can come and sit on your equity table with a small amount of equity, sweat equity. So sweat equity जो होती है उसके एवज में वो पैसे नहीं ले रहा है, आपको पूरा टाइम दे रहा है, आपको पूरा नेटवर्क दे रहा है, आपको पूरा वैल्यूएशन दे रहा है. So but he wants something out of all the time that he's spending with you. So because you're not able to give him cash, he takes a sweat equity and comes and sit on the cap table. And this sweat equity can be actually divided into, say, milestone based also. So you don't have to give upfront. Say for example, if you decide for a 2% equity of your company, say 1% after 1 year and then another 1% after 1 year, and you have to give 4 hours in a week, something of that sort, and you can make it milestone achievable also. So that's doable. All right, thank you so much. Thank you for your time. I think it's been a long session for you guys. Happy weekend.